Greetings, fellow tech enthusiasts and investors. The world runs on chips, and Taiwan Semiconductor Manufacturing Company is the undisputed king of chip fabrication. But lately, TSMC's stock price has experienced some turbulence. This has led some investors to wonder, is TSMC a fallen giant, or a hidden gem waiting to explode? Today, on Stocks Telegraph, we'll be diving deep into the world of chip manufacturing and exploring the reasons why some investors are bullish on TSMC, despite the recent dip. So, buckle up and get ready to examine TSMC under a magnifying glass. Is it a chip on the shoulder bargain, or a sign of trouble to come? Let's find out. Before we delve into the analysis, we want to hear from you. Are you holding TSM stock? Or are you considering adding it to your portfolio amidst the recent price movements? Leave a comment below and let us know your thoughts. Now, let's grab our financial charts and see if the numbers behind TSMC paint a bullish picture. In the next segment, we'll explore TSMC's recent financials and see if the data justifies investor optimism. First, let's take a look at the current price. TSMC sits at $143.60. While a recent dip might raise eyebrows, analysts seem to disagree. Their mean target price of $162.64 suggests a potential upside of over 13%, indicating their belief in TSMC's future potential. This strong analyst support is a positive sign for investors seeking long-term value. Now, let's delve deeper. We see an impressive gross margin of 52.47%, signifying a company that efficiently converts revenue into profit. This is a strong indicator of financial stability. Furthermore, TSMC boasts a healthy profit margin of 38.16%, further solidifying their financial prowess. These profitability metrics are a major reason why investors are bullish on TSMC. But TSMC's strength isn't limited to static figures. Year to date, TSMC's stock price has exhibited a remarkable growth of 38.08%. This significant performance suggests that the recent dip might be a temporary fluctuation and not a sign of a downward trend. The numbers speak for themselves. TSMC's financial health is undeniable. Strong analyst support, impressive profitability margins, and exceptional year-to-date performance paint a picture of a robust company with solid fundamentals. TSMC's recent earnings report was met with a 6% sell-off, which might seem concerning. However, it's important to remember that this wasn't a dramatic plunge, but rather a course correction. TSMC's year-to-date performance of 38% growth indicates a strong underlying trend. The sell-off could be a short-term reaction to specific factors within the earnings report and not a sign of a long-term decline. TSMC isn't just a chip manufacturer, it's a technology leader. Their industry-leading 3nm wafers allow them to pack more transistors onto a chip, making them more powerful or efficient. This technological prowess positions TSMC to capitalize on the ever-growing demand for advanced chips. Additionally, their upcoming 2nm chip development promises another wave of innovation, solidifying their competitive edge. The future of technology is powered by artificial intelligence. And guess who's building the chips that drive this revolution? TSMC. Management anticipates a staggering 50% compound annual growth rate for AI-related chips in the next 5 years. This translates to a significant revenue boost for TSMC, as their AI chip production is expected to surpass 20% of their total revenue mix. TSMC's leadership in chip technology, their focus on AI, and their potential for continued growth make them a compelling investment opportunity for many investors. The recent price dip could be a chance to enter the market at a favorable point. While the future looks bright for TSMC, there are some factors to consider before jumping in. The recent price dip from $145 to $125.78 signifies a significant market correction. While it's currently recovering, there's no guarantee it won't experience further volatility. TSMC's CEO recently lowered the overall semiconductor market growth forecast for 2024, excluding memory, to around 10% year-over-year. This might seem concerning. However, it's important to differentiate between market growth and company growth. TSMC itself still expects a healthy year with projected revenue exceeding analyst expectations. This suggests that TSMC might be strategically positioned to capture a larger share of the existing market, even if the overall market experiences slower growth. Adding to the bullish sentiment, analysts at Needham believe the recent TSMC pullback was an overreaction to the first quarter earnings report. They see potential for further valuation gains due to the high demand for AI chips, which aligns with our previous point about TSMC's focus on this booming sector. TSMC presents a unique situation. The overall market growth might be slowing down, but TSMC's focus on AI and their potential to capture a larger market share make them a compelling option for investors seeking long-term growth, especially considering the recent dip and the potential for a rebound. So, is Taiwan Semiconductor Manufacturing Company, TSMC, a screaming buy right now? The answer, like most investment decisions, is nuanced. While the overall semiconductor market growth might be on a slight moderation path, TSMC's dominance in chip technology, their focus on the red-hot AI sector, and their potential to capture a larger market share paint a promising picture for the company's future. The recent price correction could be an attractive entry point for investors with a long-term perspective. Before investing in TSMC, carefully consider your risk tolerance and investment goals. If you're seeking high immediate returns and are risk-averse, the potential for market volatility might give you pause. However, if you're a long-term investor looking for a company at the forefront of technological innovation and well-positioned to capitalize on the AI boom, TSMC could be a strategic addition to your portfolio. Ultimately, the decision to invest in TSMC rests with you. We've provided the information and analysis to help you make an informed choice. Remember, thorough due diligence is crucial. Research TSMC's competitors, the broader economic climate, and any potential disruptions that might affect the chip manufacturing industry. Let us know your thoughts in the comments below. Would you consider TSMC a solid investment despite the market growth moderation? What other factors are you considering? Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of exciting investment opportunities. Until next time, happy hunting.